everyone. I'm BikerboyDee with Zamunda Profit Squad, and you are in Zamunda University. Thank you for being with me today, and I hope that I can learn you something. Things will be a little different than previous classes. The presentation will be shorter, and I will dive more into real examples. As always, I encourage you to ask as many questions so you fully understand what is being taught. The agenda for today is to cover broadening formations and full time frame continuity. So, what are broadening formations? A broadening formation is a series of higher highs and lower lows. It is represented by diverging trend lines with the top connecting the highs and the bottom connecting the lows. Whenever you come back into a previous range, you will have a broadening formation. Broadening formations show possibilities of exhaustion. And exhaustion means that buyers have lost the ability to buy price higher or do not want to buy at a higher price, and sellers have maxed out their ability to sell any further. You can look for potential reversals at the top or bottom of a broadening formation to go back in the range, then to the opposite side. So, as you can see, we have higher highs and lower lows. Price starts in a tight range and then expands into a broader range, hence the name broadening formation. You can see excellent risk to reward if you take a reversal off of a broadening formation. So if you look at this, if we notice that we were coming off the top of a broadening formation and we were targeting the bottom of the broadening formation, we can look for reversal candles or strat actionable signals or whatever strategy you have for reversals. We can start looking for those as we reach the bottom of the broadening formation to take it back up to the upside. The reason this is a good risk to reward is we are already at a discounted premium price. So we have more reward to the upside than we do to the downside. So as you can see, we are expanding. If your broadening formation is expanding, your trend lines are diverging, which means going away from each other, and it's showing something like a megaphone, congratulations, then your broadening formation is correct. If your lines are converging, price is coming from expansion and it's starting to tighten, squeeze, or contract, then that is not correct. We're going to look at some real examples. So the reason people struggle with broadening formations and why they never really get a consistent, clear answer when they ask how to draw a broadening formation is because there are many different ways to draw broadening formations. And different situations, you may have to use those different ways. So I will show you some of the different ways, but first, you must understand that the only rule is that they must have higher highs and lower lows. That's the one thing that you can't deviate from. It has to have higher highs and it has to have lower lows. So let's look at the first way and the way that most people are taught when they are taught how to draw broadening formations. So the first way people are usually taught how to draw broadening formations is to find a 3-bar. And the reason that they say find a 3-bar is because a 3-bar has automatically built in higher highs. The high is always is higher than the previous candle, and the low is always lower than the previous candle. So that by definition constitutes as a broadening formation on a smaller time frame. So one way of doing it is find a 3-bar and you draw it from the high to the previous high. But the previous high has to be a lower high, which it would be in a 3-bar. And then you draw from a low to a previous low. And let me change the color on these. I like to color code my different broadening formations. So That is one way of doing it. Now, the reason I personally don't like this method is because sometimes the lines are too sharp. So if you see the top of this broad information, and let me move my zoom out the way. If you see the top of this broad information, as of right now, it looks like that it could be respected. This is a pretty decent broad information. But sometimes when you draw for threes, depending on the previous candle before the three, the line could be too sharp down. So I'll find an example of that. But this in this example right here, it kind of works out perfectly. This is a beautiful broad information. So let's find another example. So let's find another three. Okay, let's use this one for example. So if we were to draw our broad information like this, using the same method, that bottom broad information is very realistic, but that top broad information is very sharp. So if we're waiting for price action to reach the top of this broad information, since it's such at a sharp angle, we may be waiting for a long time and we may miss the other broad informations that the chart presents to us in the meantime if we only look at a broad information that's this sharp. Does that make sense to everybody? Any questions on that so far? Check the chat. Okay. So no questions there. So the next way to draw broad information is, and let me get rid of this. The next way to draw broad information is to pick a high, preferably the most recent high, and to just draw it to any candle that's lower than this candle. So any high that's lower than this high that we click, you can draw it to that one. So you can draw it to this high, you could 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 draw it to this high, this high. In any of these, you can draw it to. As long as the high of whatever previous candle is lower than this high, then you can draw it to it. And the same thing goes for a low. So we can take this low right here, we can draw it to this low, we could draw it to this low, we could draw it to this low, and so on and so forth. So I have to give you the pros and the cons for each method so you understand, and it helps best guide what method may be the best for you. The cons for this method of drawing them is you really don't have any consistency. So if you want to draw broad informations pretty much the same way every time, if you just draw it to any low, when you go to a different chart or a different ticker, or you want to practice broad informations, you won't really have a set method on how you draw broad informations. You'll kind of just be picking a random candle. And if I pick this candle up here, you guys see how sharp that broad information is? Does that really seem realistic? Now it can happen, but it's not so much realistic. There's a lot of other information out there that you're missing. Now, what you can do if you just wanted to draw a million broad informations, you could just draw every one if you wanted to. And that's another way of doing it. So broad informations are used as like support and resistance. You can think about them as support and resistance. So the way you can look at that is, if it comes back down to this broad information, you'll want to see it break through this and then go to this broad information. You want to see it break through that, maybe retrace up to this one, retest that, and then go through this broad information. So you can use broad informations like that, like support and resistance. And that is one way that I do use them, as opposed to having your traditional horizontal line as pivots. And there's nothing against having support and resistance with horizontal lines. I still use them. But the thing with broad informations is they highlight where price could possibly go, where liquidity is. So if you're looking at a support and resistance at a horizontal level, so like let's say if this was our resistance, you may get into calls after it breaks this resistance and try to take it all the way up. But what happens? You get trapped out and it goes back down. But when you have a broadening formation, then you kind of get to see a little bit better where price could go before it rejects. So this would keep you out of going long on things that you should be short in, and play in a reversal, as opposed to just getting in at a resistance and trying to ride the wave up. So the next way, the final way, or it's not the final way, there are plenty of ways out there. But the way that I do it is I take my broad informations off of swing highs and swing lows. Now, what a swing high is, let's use this candle for an example. What a swing high is, it means that the middle candle, the high, is higher than the candle to the left of it and then to the right of it. So you see how this middle candle is sticking up and the high is higher than the left and the right? That will constitute as a swing high. Now, a swing low would be the opposite. The low of the candle is lower than the candle of the left of it and the right of it. So what I want you guys to do right now, everybody on this call, what I want you to do is stick your hand out, palms facing away from you. So you should be looking at the top of your hand. You should be looking at your fingers, your fingernails and everything. And I want everybody to stick their hand out with their fingers together. Now, if you look at your hand, you'll notice if you're normal, you don't have any deformities. If you got deformities, this don't apply to you. But if you're normal, you'll see that your middle finger is longer than your ring finger and your pointer finger. You see how it sticks up like that? So that will be similar to a swing high. That middle finger will be a middle candle that's higher than the left candle and the right candle. And if you want to find a swing low, just flip your hand upside down. Now your palm should be facing, it should be facing you. Now you see that your middle finger is still the longest, that didn't change, and it's longer than your ring finger and your pointer finger. That would be a swing low. So now you can't unsee it. If you're struggling with swing highs and swing lows, just put your hand out, and that'll help you see swing highs and swing lows better. Any questions on that? I'm gonna check the chat. No, I don't use any indicators for broad formations, nor do I have any recommendations for indicators for broad formations. I don't know what's out there. I just like to draw myself. The more you draw them and the more you practice, the better you'll get them, and you'll see them way easier. It'll come natural where you don't even have to think about it. So I know a lot of people are probably wondering what those blue dots are on my screen. And what those blue dots are is it's an indicator to point out swing highs and swing lows. If that helps you draw broad informations, you're more than welcome to use that indicator. That indicator is called inducement stop hunt. And I'm gonna go to the inputs. If you do decide to use this indicator, the only thing that you have to click on is show fractal highs and lows. And that will show the blue dot as you see on the screen. So those will show all of your swing highs and all of your swing lows. So if you decide to use that and you want to get help drawing broad formations, or you want to, have training wheels to help you point out swing highs and swing lows, then that is the indicator to use. And I'll say that one more time because I know somebody might have not caught it, but it is the inducement stop hunt. And then it says TFO after it right here. So the thing with that indicator is it's not perfect. It does not point out every swing high and it does not point out every swing low, but it does give you the general idea of the major swings and the major pivots that those swings happen from. It helps you see them visually very quickly. So like this candle right here, this would be a swing low. There's no dot on it. Right here, this would be a swing high. There's no dot on it. So like I said, it's not perfect, but it's pretty accurate for the most part. So with that being said, the way I use swing highs and swing lows is you can draw broad formations off of the swing highs and swing lows. So you can just literally connect that dot to this dot. You can connect this dot to this dot. Now you can candle cut when you're drawing Broadening formations. I know that trips some people up sometimes. They're like, oh, well, this low is lower than this low, so I can't draw a bottom. You can candle cut. So what I mean by candle cut is you can sorry about that. You can ignore this candle and then just go to another swing high or swing low. So I can just choose this one if I want to, and that's fine. It's still respecting my Broadening formation. And how you know your Broadening formation is solid is if you look back in time. So we drew it from here to here. You can see that the Broadening formation was still respected here. We drew it from here to here. You can see that it was respected here. It rejected it here. So you can draw them and then you can see that they've been respected. So if we draw a Broadening formation at the top, we can draw it from here to here. Now, the reason I chose this candle, I know I said I like to draw them from dot to dot, but this candle going from this high just to the previous candle, it hit it 3 times perfectly. So that's what I meant by different situations. You might have to use different methods. And Broadening formations are fractal, meaning they're on every single time frame, from the 1 second to the yearly to whatever time frame you want to look at. And Broadening formations are also infinite. They are Broadening formations everywhere. And the reason that being is price moves up and down. It doesn't necessarily move up and down, but it aggregates up and it aggregates down. Price doesn't just go up in one straight line. Price doesn't look like this. It doesn't just go up in one straight line. It creates a series of higher highs and higher lows. That's how it reaches its ultimate price, by creating those series of higher highs and higher lows to go up to the price. It doesn't just go straight up. So that's why there are Broadening formations on every single time frame, and there are Broadening formations everywhere. Do we have any questions about that so far? And please feel free to come off the mic and ask your questions. I encourage it. I hope you do. It's very hard for me to check the chat while I'm doing the presentation. So please ask any questions on what I've said so far.
I have a question.
Yes, ma'am.
Is it best to try to draw them as close to the current time frame, or does that matter at all?
So it matters. It depends on what you're looking for. Excuse me.
Okay.
So if your focus is only on the current time frame, there's nothing wrong with just drawing a Broadening formation right here, because this is the current time right now. There's nothing wrong with that. And I'll actually draw it to this one. Yeah, I'll draw it to this one. There's nothing wrong with that because this is the current time. So it meets the criteria of price being contracted and then expanding. So there's nothing wrong with that. If you want to see a broader picture, you can draw a bigger one. And you don't only have to draw one Broadening formations. You can draw as many Broadening formations as you want, as your eyes can tolerate. Because like I said, Broadening formations are also support and resistance. So if it breaks through this Broadening formation, it may be headed for this Broadening formation.
Okay.
Does that answer your question?
Absolutely. Thank you.
Perfect. Any more questions on that? And let me check the chat. Is it necessary to draw Broadening formations on every time frame? It's not necessary, but it is very, very useful and very, very beneficial. So when you draw them on every time frame, which we're about to do that very soon, I'll show you exactly how I do it. It's useful to see where price could potentially go. And the way I do it is I have different colors for my different Broadening formations. So for my different time frames, I have different colors. And the importance of that is, if let's say you had a daily Broadening formation and then you had a weekly Broadening formation, that weekly Broadening formation is going to be stronger than that daily Broadening formation. And then a monthly Broadening formation is going to be stronger than a weekly broad information. The reason being is because on a higher time frame, that's where that's where that range went for a bigger time frame. So if we're looking at a monthly chart and we find a broad information on a monthly chart, however many candles are in that range, that's where price was during that range. So that's important to know. That's similar to looking on TradingView and seeing the 52-week high and the 52-week low. That's that you're looking at the yearly range. That's exactly what that means. Is you're looking at that, what was the range for that year? And that's important to know. So if the 52-week high is 150 and you're trying to get calls at 149, are you more likely to go past 150, or are you more likely to come back down to the lows? You're more likely to reverse and come back down because that stock may be exhausted. Now, you may be right, but there's a better chance, and logically thinking, it's more likely to reverse after being exhausted. Okay, just reading the chat to make sure I cover everything. Four Bones said, when I draw them, I try to go back and look at what the tail end is doing. I like to see that it acts like a trend line in the past. Would that be a correct way? Four Bones, you are right on the money. That is exactly what I do also. And it's not a requirement that the tail end acts like a trend line, but when you see that happen, you got to give yourself a pat on the back, like, oh, that was a good broad information. For example, we drew it from here to here, and then you can see over here it acted like a trend line. So yes, that is an extra confirmation, or when you do see that, that just confirms that you did it right. That's the right way. So yes, to answer your question. So do we have any more questions on broader formations before moving on? I know there's some out there, and I know people don't want to ask, but I really encourage you to, because I do not want to leave you behind, and I don't want you to have questions later. So now is your time to ask. I really want you to ask. Anybody? Don't be scared. Come on, guys. I'm not that good of a teacher. Don't boost my head up like that. There's no way I answered all your questions. Really?
We definitely kept it simple. We appreciate you.
Okay. I'll take that. I'll take that. All right. So I guess we'll move on. So I'm going to stick with Google. And what we're going to do next is we're going to, okay, the chat is clear too. Perfect. I'm going to show you how I chart broad informations. Now, you don't have to do it this way, and I will give you a warning. The way I chart them, especially if you're a beginner, it can get hectic really fast and it can get overwhelming. But just stick with me, and then I'll show you some other options per se versus the way I do it. And let me check the chat. Perfect. So the way I like to do it is I start on a quarterly time frame, and then I work my way down to a monthly, and then I work my way down to a weekly. Now, I don't chart broad informations on a daily because that's just too much information. There will be broad informations everywhere. But if you want to, then you're more than welcome to do it. Most times the weekly broad informations will take care of the daily broad informations. They'll share the same lines. So you won't have to worry about that. So yes, that's the way I do it. So now I'm gonna drop some extra tips when drawing the broad information. So if you guys were in the first class that I did, I went over the object tree. Now I'm not gonna go as in depth today. We have that class in our links, so you're more than welcome to go watch it. If you don't remember it, go watch it again. But the object tree is how you stay organized. So as I mentioned before, I color code all of my broad informations. So what that means is I'm going to pull up my object tree. and I'll show you how I'm going to save them and how I'm going to keep everything organized. So I'm starting with a quarterly broad information. And I forgot to mention there's two ways that you can choose to draw broad information. So the first way is you can click the high and then drag it to a, oh, I'm in the wrong tool. My bad, y'all. You can drag it from a high to a previous high, so you can go backwards. The other way, if you like to complicate things a little bit more, you can go from the previous high to the higher high. So one way is going from front to back, and the other way is going from back to front. I hope I didn't lose nobody with that. I feel like I did, so I'm gonna just show you one more time. So, and let's just go off of this candle. One way is to go from this candle right here backwards like that. The other way is to go from backwards frontwards. It doesn't matter which way you choose to do it, but that's just, I don't know. There's a lot of different ways that people learn and the way they see things. So those are your options if you are either or. So let's take that away. So actually this is this would be my top of broad information. And I'm going to go from this 3 to the previous candle. So I'm using one of the scenarios that I mentioned previously. I'm using that because this is the most recent swing high, and the next swing high is all the way down here. So I don't want that line to be so sharp that I'm missing more information. So here is the downfall if you draw from front to back. So in my templates, I have these already set up to the way I want them color coded. So the way I have it set up is I have it extended to the right, but since I went from right to left, it's not showing me my right side. So in this case, I have to go from this way to this way. And that's why I mentioned it, because sometimes I have to do it myself. So that is a broad information top as of right now. This high is higher than this high, than the previous high. So we check the box on that one. So then we have the next broad information. And I'm going to go with this one. And the reason, so now I'm using the other example. I'm choosing a candle with a low that's higher, a previous low that's higher than the current low. I'm choosing that one because there aren't any swing lows in this sequence right here. So I'm choosing to use this like a trend line. Now, how can I say this? A trend line can be a broad information, but a broad information can't be a trend line, if that makes sense. So you can have lines that act as a trend line, but a broad information can't be a trend line. And the reason that's being is broad informations have to diverge. They have to go the opposite direction. So that's not the case with a simple trend line. If I drew a trend line here, and let me change the line. If I drew a trend line here, this is also a trend line, and this is also a trend line, but you see they are converging. So a trend line can be broad information, but a broad information can't be a trend line because broad information has rules. Trend lines have rules also. You have to have higher lows and higher highs. So that's why a trend line can be broad informations, but a broad information can't be a trend line because also in a trend line, you can have lower highs and lower lows. So I hope that makes sense for anybody. So that is a quarterly broad information. That is not a quarterly broad information. As you can see, and somebody drew on my screen, we are sloping upwards. So if you know anything about lines, you paid attention in math, lines are infinite So with this sloping upward, that means if I were to draw a broad formation at the top, at some point of time in infinity in space, those lines will intersect. They will cross paths and they will converge. And that's not what we want. So that is the reason your low has to be, your most recent low has to be lower than a previous low. So I think I am happy with that one so far. That is a very steep one. So let me draw one more. Let's see. This is one. Boom. And this is probably the most practical one, because we will see price in this tight range, and as price goes further out, it can start expanding. Now, this is a tight broad formation, but it is a broad formation. It works. So I'm going to keep that. So back to the object tree, what I'm going to do is I'm going to save these lines. And like I said, watch the other video and I'll go more in detail how to do that. But I'm going to save these lines and I'm going to group them. So these are my quarter BFs. And BFs is just that's how we say broad informations. And then I'm going to add these there. Boom. And I'm going to lock them. So now what that just did, for anybody confused, I just grouped them in the same category. So now I can toggle them all the same. I can hide them at the same time. I can lock them and unlock them at the same time. And I can apply templates to them all at the same time. So if I wanted this to be on my template of, let's see. If I wanted this to have the template of weekly broad informations, and I did that wrong, sorry. If I wanted them to all have weekly broad information templates, they will all change. If I wanted them to go back to my quarterly broad informations, they'll all go back. So that is the significance of having the object tree. You can organize everything a little bit better. So we're going to move on from that. So now what I do is I go down to my monthly broad informations and we try to find some here. Sometimes your tops and bottoms on the different time frames, they will share the same lines, and that's okay. So if you are trying to draw broad information on a monthly and you can only find a top, or you can only find a bottom on a monthly, but the top of that monthly is also the top of the quarterly, that's fine to use that same one. There's nothing wrong with that. Broad formations really is a lot of free range, y'all. You can customize it to how you want to see things, what data that you want to process. It's really up to you. It's really not a lot of clear cut broad informations. I do like the swing highs and the swing lows because it kind of keeps us all on the same page and it gives us a nice even range. So let's find some on the monthly. And right here, I'm going to have to change this back to monthly. And you see how I have them color coded? So what I did is I went from this swing low to this swing low. And I'm going to keep that top from the quarterly because it shares the same top. And I'm good with that. I'm fine with that. So a quick analysis could be, if price goes up to the top of this broad information and it comes back down into the range, maybe it'll try to break this broad information. So once it gets close to this first broad information, I'm paying attention. Now I want to see, are we setting up for a reversal? Is it giving me a reversal camera? A reversal candle? Is it giving me a hammer? Is it giving me a Strat actionable signal for a reversal? So I'm paying attention once it gets right here. Let's say it keeps blowing through. Okay, now I'm waiting for now I'm looking at this area. So having multiple broad informations allows you to assess what's going on in that moment of time. That is the importance of it. So let's keep finding broad informations. This is a broad information. This is also a broad information, as you can see. So this was a broad information right here. It respected it. It went to the highs, and now it broke through. It broke through to where? Now it made another broad information. It just expanded the range more and more, creating more broad informations. That's all that's happened. So we have another broad information top right here. This is a broad information top. This is a broad information bottom. So I'm not going to go through every single one because I'm sure you guys get the idea. But do we have any questions on that so far? That's me. It gets overwhelming seeing all of the lines. I'm a newbie. I got you. Yeah, it can be very overwhelming seeing all of the lines, especially with the tail ends. It could be a lot. But you also have to realize when you're on a smaller time frame, you won't see these lines like this. And that's why I group them. So when you're charting normally, you can just hide them in the meantime, so you don't have all those lines on your chart all the time. So let's do that now. Let's group these lines. And we're going to call this monthly BFs. Okay. Going to lock those. And now what we've done is we can hide everything at the same exact time. Oh, I missed some. That's why. Lock them again. And now we can hide them all at the same time. So whenever I want to come chart Google, I won't have to worry about coming to a chart full of lines. I can just come to Google, do whatever chart I need to do. And then when it's time to further my assessment, I could turn my broad informations back on. And like I said, on a smaller time frame, you won't see all of these lines. If you're watching it on the 15-minute, the 30, the hour, whatever, you won't see all of these lines until you're in range of those lines. So when you're approaching one, you'll know, okay, this is a monthly broad information top because I've already color coded it to know what is happening. And you're going to see it sloping up. So it's obviously going to be a top versus you seeing a bottom. So those will help you know when to get out of trades better also if you're on a smaller time frame and you see it approaching a broad information top, you may start looking for a reversal. Now, if it blows through that top, then you know, okay, I'm good. This is a strong trend. We chugging along, and you can stay in that trade. So now let's go down to a weekly. Now, weekly is mostly where you're going to have the most broad informations. That's because there are more candles. Obviously, there are more weeks than there are months. So you're going to have more candles. So for the weeklies, and let me change my template to weekly. So we'll start plotting them out. So this is a top right here. We see that immediately. This is a swing low. And you see how it followed that trend beautifully. I can also use this swing low right here. I can use both of these if I want to. But you guys see how all these lines start, it starts being a bit much. Sometimes it can be a bit much. So you literally just go and just plot them all out. So let's go down to a smaller time frame and see what this looks like. And I'm just going to mark the daily high and the daily low. So let's go down to a 15-minute. So while we're trading, like I said, you won't see all of those lines because you'll be in a smaller range of price. So if we were trading, and let's say that this was a call entry to the upside, we would know that they might possibly trap calls at some point because we're approaching a top broadening formation. So that could be some type of exhaustion, that could be some type of resistance. So when you're on a smaller time frame, all of those lines don't really look like that. They just help you see what's coming. It's like a roadmap. You want to have a roadmap for your trades to see what could stop you getting to your ultimate goal. So having all those lines look very overwhelming and hectic when you're looking at maybe a daily chart or a weekly chart, it may look pretty crazy. But like I said, when you're actually trading, it doesn't look like that. So that's why I think it's very important to group your lines. So when you're charting, you don't have to look at them. And then whenever the trading day starts, you can just go back in here and turn them on if that's the way you want to do it. So let me name these weekly BFs. And we can start adding them. Boom. Lock them. And hide them. So now when the trading day starts, if I want to turn them on, so let's say I did my charting. I charted my actionable signals, my setups and everything. And now I want to turn them on. I can just go back through my object tree and turn them all on. And I won't have to look at them at no other time but when I'm trading. Do we have any questions on that? Anybody? Nothing. All right, if you say so. So for the people who get overwhelmed with that information, this one is for you. If that's too much information, you don't want to have all those spider webs on your chart, and it just look like a lot. What you can do, like I previously mentioned, is you can pick a time frame that you want to look at and just stick to that broad information. And if it makes another one, then you can just erase this one and draw another one. So if this is what you see and this is what you want to stick with, you can just keep it like that. Keep it simple. Now you know what's going on within this price range, and you could just rock out like that if you want. If it busts through here, you could just move it up as it goes along. So that's another way of doing it. You don't have to have all those lines if you don't want to, but like I said, you won't, if you choose to go that route, you won't see them. Let me check the chat because we have a question. Okay, perfect. So, because I do want to hear some of y'all lovely voices, I do want y'all to speak. Can somebody tell me which way they prefer and why? Out of all the methods that I just described, which way do you do it and why do you like it that way? And anybody can come off the mic and tell me that.
I would choose to draw it from back to front just because the chart is going forward.
Mm-hmm. I agree. So what she's saying is she would rather draw it this way from back to front. And people do it like that. There's nothing wrong with that at all. Like I said, the only reason I do it so on my quarterly BFs, since you see I don't have a tail end on my quarterly BFs, I draw it from, like you said, back to front. But with my other BFs, just because of how TradingView works technically, like their settings and everything, I can't draw it. It's easier for me to draw it from front to back just because it has those tail ends. So yes, anybody else want to tell me how they do it or what method works for them when they're drawing BFs? I want to hear some of you guys.
Hey, what's up, BikerboyDee?
What's going on, brother?
Not much, man. So what I do is I usually find the threes on the higher time frames because usually less threes on the higher time frame. So like say for instance the quarter year, I just find the threes on those and then I draw those. And then when I go down to like the week or the day, then that's why I try to look for the swing highs and the swing lows because if I were trying to draw threes on the week time frame, there's so many threes, there's gonna be lines all over the place, man.
Yep. That's another beautiful way of doing it. So what he was saying that he does is he finds a 3 on a higher time frame, such as this, which this is it's a beautiful way of doing it because a 3 on a higher time frame is a broad information on a lower time frame. And then if you go down to this daily, or even so a weekly, you guys can see how that has been respected. So we started in this little tight range, and then we start playing around this broader formation. And look at that. If you look on the weekly, I know I forgot who said it. I think Four Bones. He said that he likes to see it act as a trend line. If you see, we drew this on a quarterly time frame. It played around this trend line, and then it came, it rejected it. It came, it rejected it. It came, and so now this is a down trend line. This is a trend line to the downside. It came right here, rejected it. Bust through right here, came back through, rejected it to a T until it finally decided to break through that trend line and then continue up to the upper half of the broad information. So that was beautiful, sir. That is also a great method of doing it. All of these methods work. I'm not saying one is better than the other. It's all your preference and what do you want to see and how do you process information. So if you're asking a provider or you're asking questions and broad informations are confusing you, I want you to just relax a little bit, dial it down, and you're not wrong. That's the best way I can say. The way you do it is not wrong. Now, it may not look like the next person's broad information because we all have our own perceptions and we all gather information differently and we all look for different things when we're gathering this information. So because you see all these different variations of broad information, it does not mean yours is wrong. Yours is only wrong if your highs, your highs are lower than the previous high, or your lows are higher than the previous lows. Then those will make converging lines. So to put in description, what I'm talking about is if you have a high and then you start making lower highs, right? And then you try to put a broad information on that. That's the wrong tool. I'm acting like I never used TradingView before. And you try to put a broad information on that, that will not work. Because at some point in time, these will intersect. So that will not work. But as long as you're creating higher highs for the top and you're creating lower lows for the bottom, that will work. And let's draw it out. So let's say we're creating higher highs, right? And then we start creating lower lows. Right? We can draw broad informations on these. Because we're creating lower lows. So now we are diverging and the range is expanding. So ultimately, it may start looking like this because the range has expanded. And obviously it wouldn't do this in one take, but you get the idea. Okay. So let me delete this. So no more questions on broad informations, right?
I had a question on the tool that you're using because when I do the extended line, mine is like infinite on both ends, whereas you seem to have where you first start, it doesn't go, it doesn't extend past where you started it. Is that a
Yes.
certain setting?
Yes, it is. So that's what I was saying. I have templates. So this is still an extended line, and it does what yours does, right? It's extended on left and right. But if you go to settings on that line, you can change that. So I can choose to have it extended right or have it extended left.
Okay.
So these right here are my templates. These are my quarterly broad information templates. So it's set to only extend one way. And then this one, my
Okay.
weekly broad information is set to extend both ways.
Okay.
Okay,
Thank you.
no problem. So nothing else. Okay. So now we're going to move into full time frame continuity if we don't have any questions about that. So for full time frame continuity, it consists of the 1 hour, the daily, the weekly, and the monthly. Now you can use the other time frames like the quarterly, the yearly if you would like, even the 4 hour if you like it. You can do what you want. But the standard per the strat is the 60-minute, the 1 day, the weekly, and the monthly. So with this, and as you can see, I have a indicator to display that. And let me change this. Let me take this 4 hour off so I don't confuse anybody, just for the sake of knowing what's going on. So I like to have 4 screens up and I can see what's going on between the different time frames all in one tape. So I can look at this quickly and say the weekly's green, the hour's green, the daily's red, and the monthly is red. I didn't even need to have this indicator to see that. I have my 4 screens to tell me exactly what's going on. So ideally, you want to see all the time frames align with one another. In other words, you want to see all green. So the 60 is green, the day is green, the week is green, the month is green, or you want to see all red. What this does, this shows who's in control. Either the buyers have full total control or the sellers have full total control. And what you want to do is you want to follow the money. You want to hop on the moving train. You don't want to have to guess and things like that. You want to do what the investors are already doing. You take your piece of pie, you make your money, and then you keep it pushing. You can still make those trades that have conflict in the other time frames, but there's a way that you can do that and still maintain a high probability. It is better to have them in the same, like, aligned together, but it's also a method that you can use to take a trade and have them flip into alignment. Excuse me. And I'll show you what I mean by that. So one thing that I think is important is to mark the opens of the larger time frames. So I'm going to do that now. So that is the open. If you understand candle anatomy, this is a red candle. So that means that it opened right here and it's currently right here. So it's below the open right now. I'll revisit that in a second and you'll see why that's important. So now I'm going to mark the weekly open, which would be right here. And I don't have them marked as monthly open or monthly or weekly open. I have them marked as flip because I know if we are above this line, then the color of the candle will change the monthly green. So right now, the month is only red because that daily candle went below the monthly open. As soon as price goes above 137.46, that will flip the month back green. So that is important to know, especially with the setup like this one. So if as the day ended on Friday, we ended red, right? The week ended green, the month is still continuing, so it's currently red, and the hour is green. So when Monday opens up and we have an inside candle on the day, so let's plot out our inside candle based on the strat. So we have our call entry here, our daily call entry. We have our daily put entry. We have our PT1, our daily PT1, and our daily PT1 to the upside. Okay, so once Monday opens, right, that means we'll have a new day, we will have a new hour, we will have a new week. So first we'll have a new hour, then we'll have a new day. I mean, we'll have a new day and we'll have a new week because of Monday. Monday hasn't uncoupled yet. So in the first hour of trading, that hour will dictate what the week says because it hasn't uncoupled yet. That first hour will dictate what the day says because it hasn't uncoupled yet. Once that second hour comes around, that hour has uncoupled from the day. The day will still say, the week will still say whatever the day says. So if the day is red, the week will be red until Tuesday. Once Tuesday comes around, that uncouples the day from the week. Now they're their own separate entities now. So let's say on Monday, right? The market opens and we open down here, right? So as of right now, the month is red, but we know that the monthly flip to turn the month back green is at the level right here. This was the monthly open. So if we open right here and price starts climbing above, and let me draw it out. Let me draw it out. Take the magnet out. So let's say we open like this. And this is the first hour. So let's say we gap down Monday and we open like this. As price starts going up, now this is a green hourly candle, right? So as of right now, it's going to say that the day is green. It's going to say that the week is green, but the month will still be red. So let's say it stops right here. And then we get another candle. So now the hour has uncoupled from the day. So whatever this next candle is, if this candle is red and it goes below the open of the day, then the day and the week will be red also, which that will put full time frame continuity to the downside. We'll have a red day, we'll have a red hour, we'll have a red day, we'll have a red week at that point of time. And let me change this color too, so you can visualize that. So this is what it will look like after we uncouple on that second hour. The hour uncouples from the first hour. So it will look like this. So at this point in time, since this was the daily open right here, now the day is red, the week is red, and also the month is red because we're below the monthly open, right? But let's say we get a reversal and we still haven't even hit our call entry or our put entry yet. Let's say we get a reversal. And then now we're going back up to the upside. So now we just had a 2-2 reversal. So now this candle is green now because we went up. So now we're past our daily open, which was right here. Now we're past our daily open. The hour is green. The day is green. Since it's Monday, the week is still green. And we just passed our monthly open. So now the month is green also. So now we're in full time frame continuity. And let's say this thing starts running and it hits our daily call entry. And we're in the trade. It hits our daily call entry. Now we have full time frame continuity in the upside. Everything would be green at this point of time. So this is an example of you following the money, and it all started with your 60-minute. Now your 60-minute is your control group. The higher time frames will tell you who's in control of that stock for the long run, but your 60-minute is your immediate control group. That's what's happening right now at this moment of time. So based on the 60, since that 60 was green, that 60 was able to flip the day green, the week green, and the month green, just based off of this example. Now, it won't always be as sweet of an example like this. We actually need to look at Google. I need to do some analysis on Google actually, because now that I'm looking at it, if we do go to up on Google, that will give us full time frame continuity. But yeah, that's how you can use full time frame continuity in your favor, and you can turn a chart that wasn't in full time frame continuity into full time frame continuity, working with you, not against you. Does that make sense to everybody? Or any questions on that?
It does. I have a question though.
Yes.
So say that we got into that trade and the candle is right where you have it. It didn't quite hit the first price point, but the next candle brings it back down. It doesn't hit your stop loss, but it starts to turn things back red.
Okay.
Because if it comes,
I see what
and so then my question is, I got into a trade that was full time frame continuity. Now it's dropping. It hasn't hit my stop loss, but it's the conflict now with the time frame. What do you do in that case? Do you just ride it?
So to answer your question, first let me address what you said, and then I'll answer your question. So as of right now, based on the example or what you just said, it didn't quite hit my price target, but it reversed and it started going down. So as of right now, just looking at it, only thing that would be red would be the hour. The hour will be red at this point, but the month is still green because we're above the monthly flip.
Right.
The daily open was right here, so we're still above that. We're still green. And the week, this will be the weekly flip, and we're still above that also. So as of right now, the only thing that is red is the hour. So now what we would be looking for is a TTO back up to the upside to hit our price target. That's when you start monitoring your trades. We don't have any control on what happens, but we also don't get scared when we see a little bit of red, because it may just be a TTO for a 2-2 reversal back up to the upside, and it could ring or it could just hit our price target.
But that red candle that you put there, if that went further and it's flipped a couple of things back to red, we still now we still just watch it and wait to see what happens, correct?
So you would be on a smaller time frame, like maybe a 15-minute, and you would have to learn market structure. So when I'm in trades, I'm going off of market structure, and I'm also a fib trader. So I'm literally watching. So like, I'll just give you my well, it's hard to do it on this bigger time frame, but let's say I was using fibs or whatever, and I put fibs on this, and I know that the points of interest for reversals are for a strong trend is the 236 and the 382. I will be looking for a reverse off of that. If it doesn't give it to me there, I'll be looking at a 0.5. If it doesn't give it to me there and I'm still green, keep in mind I'm saying if I'm still green, I'll be looking at a 618. If it doesn't give me a 618 bounce, then I'm out of the trade. I know the trade is not going in my favor because I know that 618 is the most likely place for a reversal. If it drops past the 786, then I know this trade is not going with me, it's going against me. But the first thing I will look at before even all of that is market structure. So I wouldn't be trading just on the hourly candle. I would have just how you've seen I have the 4 screens up like this. I would have smaller time frames on there, and I would be observing market structure. So if I'm on a 15-minute and I see that the market structure is changing, as far as we were putting in higher highs and higher lows, but we just put in our first lower high, or we just put in our first lower low, I know that the market structure has just now changed, not in my favor. So now I need to really monitor and see what's going on. Now, if you just have a candle that just drops like this, you just chop liver. Like, it was nothing you could do about that. The market is very manipulative, and it's not set up, designed for you to win. So you can't control it. If that happens, You know, you just gotta, if you have hard stops and everything like that, you just have to kind of deal with that.
Okay.
It's nothing that you could have did differently. That's what I'm saying. But in a normal situation, if it doesn't just drop like that, just drastically drop, you would just be looking at market structure and also other pivot points, or maybe you hit a broad information on another time frame that you missed. There's a lot of factors. So personally, for me, the more information I have, the better I'm able to deal with my trades.
Makes sense.
Okay,
Thank you.
no
Mhm.
problem. And if all of that was confusing to y'all, like I don't want y'all to just get overwhelmed. I start talking about fibs and all that. Just disregard that. I was just giving an example that there's always more information out there that you may be missing. That doesn't mean go look for everything, because that can also overload you too. But it means that I have my method to stay in the trades and get out of trades and spot reversals and things like that. And yeah, I stick to that. Do we have any more questions about full time frame continuity? Anybody? I don't bite. So that made sense to everybody? Okay. Well, one thing I will add is when it comes to full time frame continuity, obviously the higher time frame will show you the big picture. So if we are red on a day, but the yearly and the quarterly are green, or the quarterly is green and the month is green, that's showing you the big picture overall that price wants to go up. Now, if it's red on a smaller time frame, excuse me, such as the daily and the weekly, it may just be a slight retracement or a slight reversal, but ultimately the buyers are still in there on the quarterly. If the quarterly is green and the yearly is green, those higher time frames, if those are still green, then that the money overall is still in that trend. And let me check the chat. Yes, Tina, it's very important to look at other time frames. You want to know what's going on different time frames, because what can happen is you get tunnel vision, only stuck on what you're looking at, not realizing that there are millions and millions of other traders and millions of other algorithmic trading by computers and things like that. So if you get stuck to only looking at what you're looking at, then that's how you start wondering, like, why did that happen to me? Well, that's because you missed something. So yes, very important to look at other time frames. Can we get a summary? Yes. Yes. So summary of this is, first we talked about broad informations. We talked about the proper way to draw broad information and what a broad information consists of, which is a series of higher highs and higher lows, expanding in a price range. We showed the different ways of how to draw broad informations, the different circumstances where you can use those different ways to draw broad informations. I also showed you how to categorize your broad informations in the object tree and to group them and to hide them. And with the object tree, it doesn't have to just be broad. It doesn't just have to be extended lines and broad informations. I could group all of these in the object tree and lock them and hide them and do whatever I want with them at the same time. I can group all of my drawings at the same time. The object tree is a very powerful tool. So I suggest looking into that and playing around with it. Like I said, if you didn't see our first video on how to chart, I went over it very in depth in that video. So I suggest checking that out. And then next we talked about full time frame continuity. We talked about marking the open of the higher time frames, so you know where you are in relation to the higher time frames on the lower time frames. You know when things will flip colors over here. You know when will what levels will flip those candles green to red or red to green. That's important. I suggest marking those levels. And I don't want y'all to overload you guys up with indicators, but there are indicators for these things. There are indicators, let me see. There's an indicator that shows it does it for you. And it is called Strat candles plus open levels plus active plus full time frame continuity. If you go to that, if you click it, it's going to ask for an agreement. It's a warning. You just hit apply. And it shows you these are the lines. So see how I drew that line here? And you see how the monthly is the exact same line? I did it manually, but the indicator does it for you. Same thing with the week. The week is the exact same line that I drew. The only thing I didn't draw was the daily. And that is the daily line right here.
What was that indicator?
It's called Strat candles plus open levels plus active full-time frame, my bad, FTFC right here. It's by Wolf and Bear. Now, when you get, if you choose to use this indicator, once you go in there, turn off all of these smaller time frames. Turn all of those off, and also turn off anything that says select active FTFC. Because what if you have any of these clicked on, and I think there's some of them click on by default. I can't remember, but if you have any of these clicked on, what this is saying is you have to go to that smaller time frame first. Like on your chart, you have to physically go to, like if we have a 60 or 4-hour, 12-hour day, I have to go to my 60 first, and then I have to go to my 4-hour, and then I have to go to my 12, or it's gonna like mess everything up. It's not gonna work. So just turn all of that off. I only use this indicator strictly for the daily open, the weekly open, the monthly open. So I know at what levels are gonna flip my candles on the higher time frames. Did everybody get that? Okay.
Can you go back to it one more time?
Yep. Yes, I can. It's right here. And I'll leave it up for a second if you guys need to screenshot it or write it down.
Thank you.
Okay. I'm gonna check the chat one more time. And yep, so we don't have any questions. Thank you guys for coming out and being with me today. I know it's college football going on and you could be doing other stuff, but I appreciate you for coming out. If you had another question that you didn't ask, or you think of something later, feel free to either hit our beginners chat or DM me. I'm more than happy to help you. If you haven't joined Zamunda by now, please take that step forward with your future and join us. We are a great family to have around and to be part of your journey. So once again, I thank you guys for coming out this weekend, and that will conclude this lesson. See you guys.